TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 101. You get NASDAQ off 39. S&Ps are down 13. Gold contracts trading down $6.60 at $1,086 an ounce. Silver is $14.69. You have the light sweet crude contract down 16 cents at $48.61. Bonds. The ever-ready bond market, folks, absolutely wants higher price. We have the 10-year flat at 126.24. 30-year up 25 ticks at 155.05. King Dollar's up 543 ticks at 97.62 with dramatically lighter volume. You had one spike out there. I suspect you're going to get a failure once again on price and volume inside King Dollar. The euro is down 52, trading out at 109, and the yen is up 37 at 124.30. Now, we're going to start out today with the NDX 100. The reason we're going to start with the NDX 100 is that it's possible that we have an ABC structure on the way down here. What we have is this. So we're at 110.68. How we come into the bottom of this range, which was out here on Tuesday, will tell us flat out, is this an ABC structure on the way down? The pressure inside the NDX 100 today has to do with Facebook, okay? Now, Facebook is not down a lot of points at this particular point, folks. You're down $4, which is not a big deal, by the way. Whole Foods is putting some pressure on it. Whole Foods is down $4.94. Facebook is down $4.75. Facebook, however, has the personality to get to a lot lower price. The volume's coming out of Facebook in a big way. So we'll see where this shakes out. What the NDX has done, it's got back inside the lower range once again. That's saying on a longer-term basis, it wants to run down into this 105.83 area. We go over to the S&P. We take a look at the S&P, and Facebook is putting pressure on the S&P also. S&P right now, the SPY's down 122. The key to look for out here today is that is there an expansion or contraction inside the ETF structures and the indices? If we get an expansion inside both of them, bottom line, you're going to get follow through to the downside. The S&P has not got up into its highs. Bottom line, it's in the lower range. The IWM, small caps also down 65. Gold, let's go to gold, man. They can't take gold out, folks. Bottom line, they try time after time. It's a beautiful thing. Gold hit 1081 today. We're at 1089 right now. You've done 30,000 contracts. Bottom line, the last low that was established out here that they should have been able to bang out was 1072. I suspect what you're seeing there is that you're making a bottom inside that market. Dollar index, now this is the most deviant. Dollar index, we're up 538 ticks. You are at 97.96. The volume is 22,000. The 22,000 is going into 43,000. Bottom line, I don't expect you're going to see the dollar index also make the swing point higher up there. What does it add up to? It adds up to, folks, we're going to get lower price out here today. We'll see whether we get higher volume. Dollar wants to pull back. Gold wants to go higher. In fact, as we're talking right now, gold is going higher. We were down $10. Now we're down $2.80. Bonds. Let's go look at the bond market quickly. Bonds want to go higher. Bonds are given the best and the most consistent signal and have been for a long period of time. They look like they're going to do an ABC structure on the way up, and this will be a decent ABC because the 148, oh yeah, you're talking 8 points. You're talking bonds, 30-year bond, folks, we're at 155. That baby wants to go back to 160. That's going to put a shocker in all the markets. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN-CD. Have a great one. Have a safe one. Look forward to speaking to you right back here tomorrow morning, 10 o'clock.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.